Good evening, professional colleagues, friends of chartered accountants, captain of industries, students, ladies and gentlemen. We want to welcome you to another edition of ICAN on Air. This day, the 21st of June, 2022. And I want to believe that our previous edition has been very educative, very insightful, and it's been increasing our knowledge base. And that is why we are always here to give you the top notch of the program on ICAN on Air. Today, we will be talking on international taxation and the Nigeria economy. You and I understand that tax are mandatory contribution levied on individual and corporation by the government, whether at the local level, at the regional level, and at the national level. But it has taken a step further by making it on the international basis, based on the globalization that we are experiencing in no distance time. And that's why we have put together issue that has to be on international taxation and the Nigeria economy. And today, I will be guesting no other person than Mr. Onasami Emmanuel ACA. Who is he? Before I bring him on board, currently he is the senior manager in the transfer pricing service division of Adansin in Nigeria. Prior to him joining Adansin, he worked with Chi Nigeria as a regulatory officer, for where he joined the tax and regulatory services division of the KPMG professional. He has a balanced experience in corporate finance, tax, and transfer pricing services across the industry sector. His passion for contribution value to businesses in Nigeria led him to seek relevant skill required for effective contribution and guidance. He is a transfer pricing advisory services, which include planning and policy development, tax and TP compliance services, and the TP controversy services. He also have his experience on it. In his current employment, he provides tax and transfer pricing services to diverse industry. To him, for his educational career, he has his BSc in food engineering from the prestigious Obafemi Awolowo University, a member of the Institute of Chartered Accountants of Nigeria, an associate member, and a member of the Associate of the Certified Chartered Accountant, ACCA, Chartered Institute of Management Accountant, CIMA, and National Examination Board on Occupational Safety and Health from United Kingdom. In no distance time, I will be unveiling our guest speaker for today. But before that, I'll go on a very short break. And when we'll be back, we'll be discussing with Mr. Emmanuel Onasami ACA. I'll be right back with you. Thank you.
As a finance professional in a disrupted business landscape, what does it take to be in demand? What does it take to attract great paying international roles? If you're an ICAN member, it'll just take one exam. That's all it takes to complete the globally recognized SEMA professional qualification and the internationally respected CGMA designation. As a SEMA member and a CGMA designation holder, employers will look at you as a finance professional, constantly acquiring new skills to add value to the business. That's why they'll be willing to pay premium to hire and retain you. If you have 5 years of relevant experience and are an ICAN member, you can directly sit for the final exam of the SEMA Professional Qualification, the Strategic Case Study exam. Start studying the SEMA Professional Qualification. Prepare to make an impact.
Welcome back. Welcome back. And it's my pleasure to bring to bear the guest speaker for today, a seasoned professional, Mr. Emmanuel Onasami ACA. You're welcome. Good evening.
Thank you, Mr. Olusegun, for having me this evening. Thank you.
A pleasure to have you. So we hit the ground running this evening, talking about international taxation and Nigerian economy. Firstly, I want to ask this question. We have the Nigerian tax system, and we are talking about international taxation. What is international taxation, and how is it different from the Nigerian taxation?
Okay, thank you very much, Mr. Olusegun, and the ICAN body, my senior professionals, and my colleagues on this session tonight, this evening. You know, it's such a privilege to be sharing thoughts on this topic this evening. So if I can quickly respond to that question, we all are aware, you know, at least if you are a student of finance, you know that taxation, for the most part, is a local issue. You know, jurisdiction by jurisdiction, you have different countries with their different tax law and their different tax regimes. So, you know, what's typically obtains within, you know, a country, for example, Nigeria, you know, the different type of taxes that operate within the system, you know, the different tax law that we have, those things are the things that are aggregated to determine what we call the Nigerian tax system, or what we call the Nigerian tax regime. You know, but when you now start talking about tax interaction between one or two countries, then you have started introducing the concept of international taxation. You know, when you start talking about the tax that we apply on cross-border transactions, when you're talking about tax that we apply when you carry out international trade, when you talk about the digital economy and the type of taxation mechanism that we apply in such instances, then you have started talking about international taxation. So to put it straight away, to define international taxation for the purpose of the audience, you know, is an aspect of taxation, you know, that speaks to the tax interaction between one or more countries. So, you know, to put it in a very simplistic manner, you know, is an aspect of taxation that speaks to the tax interaction between one or more countries. Thank you very much. Let me stop there, you know.
Thank you very much. In fact, you've simplified it by letting us know that once it has to do with two or more nations crossing border or going digital, then you are no longer talking of the local aspect of it, then you are going international. But let me just bring this to you. We now have two aspects of it. Nigerian tax system, which we can call the local tax system, and we're talking about international taxation. How can we harmonize this Nigerian tax system and the international system? Is there any handshake with them?
Oh, okay. So, you know, I would love to address that question from this perspective. You know, anything international taxation, you know, from a global perspective, is always driven at the United Nations level. You understand? And United Nations through the Organization for Economic Cooperation and Development, that we call the OECD. And most of the time, What the OECD tries to do when it comes to international tax is to issue framework, you understand, that can be adopted globally, by different countries when it comes to international relations or international trade, as the case may be. But let me paint a scenario for the purpose of understanding. If I am in a room and I'm with Mr. Olusegun, for example, and we are given the task to design a framework that will benefit every of the audience in this room, you understand? We will, including ourselves. One of the things that we're always careful to do is that, yes, we are empathetic towards the people, but we are never going to ever come up with a framework that will harm us. You understand? Myself and Mr. Olusegun. And, although the United Nations it comprises of multiple nations and people have their voices, but it's evident that, some voices are more stronger at the United Nations level than the other countries based on the way you are ranked. We are familiar with the G8, we are familiar with the G20 and all that, speaking to the power. So most of the times when those international frameworks or law are coming out, and are being sold to other jurisdictions to adapt, for the purpose of their own local laws or adapting it within their own domestic regime, one of the things that you want to also check out for, locally is to see that as much as possible, your own interest is also covered as much as possible, and that's when you can now talking about harmonization. To be honest, everything that has been churned out from the global scene and the global perspective when it comes to international taxation, for the most part, they are for the benefit of everybody that are part of that, But specifically, that different countries, they also have their different fiscal regime and fiscal policy to stimulate growth within the economy and to improve the inflow of, foreign direct investment, And if you look at it very well, the harmonization will then come from this perspective of saying where you think that whatever is coming from the international scene closely align with your direction as a nation, you can adopt and implement those recommendations in your local jurisdiction. But where you think that they are counter policy for you and they are going to limit or inhibit the growth that you try to achieve as a nation, then you want to exercise caution before you embrace those recommendations coming from the international sense. The truth is that once you agree to be part of an international framework, the way it works in the international taxation scene is that the agreement at the international level supersede your local domestic laws. So you need to be careful, watch carefully, and be sure that there are recommendations that will enable you to achieve the growth that you seek, even as an economy. And let me stop there for now.
Okay, that's awesome. That's awesome. I'll take it from the last word you said about having an agreement with the international space. And this will now bring these questions to bear. How does the international taxation affect the Nigerian tax? And does Nigerian accountant, do we need any special knowledge or special certification to practice this? Considering the fact from your last statement that we need to actually have an understanding and agreement, do we need special certification as accountant? Because we know the role we play in making sure that the government have their revenue to time.
Okay, let me just respond. Based on experience, I wouldn't say that you need a special certification, to practice international taxation. We have seen a number of international tax lawyers, where they provide expert advice on international tax matters, cross-border issues. And we have also seen, even from the basic curriculum of CITN, which is the body that is responsible for harmonizing the profession, of taxation in Nigeria, they also have that aspect covered in a sense. So I would rather say that it's more of a matter of interest. As a professional, you can develop interest in that niche and upskill yourself in that particular aspect of taxation. There are enough resources out there, that you can lash on, to upskill your knowledge around the area of international taxation. But not to belittle the importance of certification, just like every other person wants to advance in knowledge. You go to university to get a PhD, MSc. We also have advanced, courses that people can also take on international taxation that can open their broader perspective on how these things work on a global scale. And I'm also aware that in Nigeria, we have the IFA, the International Fiscal Association, those people that pride themselves as an association of international tax experts in Nigeria. If you are also interested in part of that association where resources can be shared, ideas can be shared, knowledge can be shared, why not? You can be there. But to say you require a specific certification, I don't think so.
Thank you very much. At least that cleared the coast that as a professional accountant, we have that prerequisite to practice international taxation. All we need to do is to gather more experience, be inquisitive to ask questions, associate and research more and more and more on that. And this will lead me to this question. In international taxation, there's one thing that I've always been hearing. I was always hearing it TP, TP, TP. Later, they said it's transfer pricing. And I'm like, transfer pricing. Let me just ask this question. What is, in the context of international taxation, what is transfer pricing? And how does it affect the Nigerian tax revenue?
Okay, thank you very much. I promised myself not to use too much technical jargons, this evening,
so that we can follow you smoothly.
You are pushing me gradually to that end, but I will try not to. Let me respond by saying, transfer pricing fundamentally is more of a performance management issue. I think if we can understand it from that perspective, it will help us to appreciate the subject of performance management. When we did our performance management course training, we spoke about, we were taught about divisional performance management, where you have a cost center, where you have a profit center, where you have to make or buy, those kind of decisions that typically relate to performance management. Then that speaks to the price that one division, when you're looking at it from a performance management perspective, one division of a company is selling to another division such that we are maximizing the global profit of that company as a whole. So, but the twist, what introduced transaction into transfer pricing is the fact that the tax law in different jurisdictions, they differ. And then, tax manager of multinationals then see transfer pricing as a tool effective tax rate, or potentially optimizing the effective tax rate of a group, by using transfer pricing. For example, to put context to it for understanding. So we are in Nigeria where the effective tax rate of corporate, business is typically 32% if you account for education taxes, and you take, for example, you go to Dubai, where there is no corporate tax rate, and you have an entity in Dubai providing management service to an entity in Nigeria. At the group-wide level, it makes sense for you to report more of the group's profit in Dubai rather than reporting the group's profit in Nigeria. You understand? So through the use of transfer pricing, some smart CFOs can actually achieve some form of tax efficiency using transfer pricing to maximize the profitability of the group in a region where effective tax rate is less. But what we have seen in recent times is to say, because transfer pricing is a two-legged tool, and it's like all of us, we are sharing a big pie. Different countries are trying to ensure that their share of pie is not eroded, and that's what we typically call our tax base. It's not eroded when it comes to transfer pricing matter. So the truth is that the concept of transfer pricing try to achieve when we speak about transfer pricing and putting regulation around it, what we're trying to achieve is to say, notwithstanding whether you are related or unrelated, there is an expectation, there is a moral burden on you as a business to conduct your transaction as if you are not related with your group entities in any manner. And that term, we call it commercial terms. So we expect you to transact at commercial terms such that you maximize your local profit and the local tax authority can get their fair share of profit. And if you follow, the developments, the Google scandal, the Starbucks scandal, where, it's being reported in the US that, some even one-man businesses are paying more tax than Google. You understand? Because in one way or the other, they've been able to, use the tool of transfer pricing to move substantial portion of the group's profits to a region where they may pay zero or close to zero taxes.
Okay. Let me bump in there. Apology from what you're saying. Can we say that this transfer pricing is actually affecting the Nigeria indigenous company, just from the explanation you've given?
Okay, I said something earlier. The best way to look at it is we have a big pie or a big pizza on the table, that every country is trying to take their share of the pizza. You understand? And as much as possible, there's a possibility that if you're not careful, and you are not smart enough as a nation or as a tax authority, your share of the pizza may be moved to another country. You understand? If you are not careful through the tool of transfer pricing. So there's a possibility that Nigerian businesses are being affected. And when I say affected in this perspective, I'm saying it from the perspective of the tax administration and the profit that is being reported in Nigeria. On a group-wide level, it may make sense for the Nigerian entity to be reporting less profit because the tax rate in Nigeria is high. But from a tax administration perspective, is that the right profit that entity ought to have declared? You understand? If not for the tool of transfer pricing that may have been used by the group to shift the profit from Nigeria to another jurisdiction where the tax rate is more friendly for the group's benefit.
Thank you very much. To our listeners at home, at this point, I just want to encourage you. I'm sure you are feeling Mr. Onasami this evening on this international taxation. Feel free to bump in your questions so that Mr. Onasami can do justice to them. It's ICAN on Air this Tuesday, the 21st day of June, 2022. And we are talking on international taxation and Nigeria economy. Guesting Mr. Emmanuel Onasami. And he's been doing justice, putting perspective to this on the things that we need to do as professional accountant, the knowledge we're supposed to have as professional accountant to make sure that we contribute our own quota in the area of revenue generation for the country. Mr. Emmanuel, let me come back to you. The tax system of a country underscores our fiscal policy and a major determinant of a country's ability to finance our budget. How does international taxation affect Nigerian revenue and by extension, the overall economy?
Okay, thank you very much. Like you've rightly said in your question, tax is a major fiscal policy tool, that is being used by any government to rake in revenue for the purpose of governance. And if you look at it, apart from the oil revenue that Nigeria as an economy has largely dependent on over the years, there is a new focus on taxation to increase our tax earnings. In the past, Nigeria used to be known as one of the least country that has the tax to GDP ratio. But, from what has been happening in recent times, there's an increased focus to increase our tax to GDP ratio to rank among, the average, across the globe. So speaking to that, if you look at what I said earlier during this program, about the way international tax works is the tax interaction between one or more countries. And as much as possible, every country is trying to maintain its own share of the pie such that they can rake in enough revenue for the purpose of governance. And the same thing applies in the case of Nigeria. Nigeria also needs a lot of infrastructural development, and this infrastructural development will definitely be bankrolled by some form of funding. And look at the COVID came on us, and oil revenue dwindled, and that was what's largely responsible for the renewed focus on taxation. So if you are not careful as a nation and you are not paying attention to international taxation, you may be leaving your food for other countries to be eating. You understand? You may be leaving your revenue for other countries to be getting. I explained the concept of transfer pricing earlier, and many other aspects of international taxation, the aspect of tax transparency, tax avoidance, tax evasion, by people that have tax obligation in Nigeria but are not fulfilling it. So some global instruments have been designed from an international perspective to say, if you are able to plug into this framework, we are able to guarantee that, your fair share of income that relates to your economy remains in your economy. And let me try to speak to that for the purpose of our audience. Is to say, there are several projects that has been initiated at the United Nations level. We are all familiar with the base erosion and profit shifting project, which is standing on three pillars. And one of the first pillars is to say substance. Gone are those days where you have letterbox companies, shell companies just being incorporated in one tax haven or tax-friendly zone to house all the profit of the group, without any significant economy. So one of the things that the OECD is pushing through several framework and multilateral instruments that they are pushing is to see to it that before you can get a fair share of the profit of a group or a multinational entity, there must be substance to what you are doing. You cannot just be a letter company and be housing all the profit of the group. So there is an increase and aggressive push at the international scene level to increase substantial regime that are substantiated. Also, there's also a push at the international scene to improve coherence in the sense that you have different tax law in different countries, and international tax experts have been able to, through the arbitrage that exists within different tax law, design frameworks such that people enjoy double non-taxation on a transaction. You are exempted from the tax in one country, and when you bring the income into another country, the income is still also exempted, and those kind of framework. So the OECD is also pushing inclusive framework where all countries are encouraged to participate to kind of fine-tune all these kind of arrangements such that such kind of transaction will never escape paying the right share of taxes where those taxes are expected to be paid. And the last aspect of that BEPS project is transparency. Before now, if you are a tax authority in a local jurisdiction, say Nigeria, and you are asking taxpayer about the affairs of their counterparts maybe in the US, the response they will give you ordinarily is to say, this is beyond your jurisdiction, and as such, you are not entitled to get those kind of information. So the OECD has pushed framework that will naturally and automatically improve transparency, within the global system. And those are the kind of framework that Nigeria has, also adopted in recent times. Like I used to tell my people, this is a new era of taxation. Transparency is the order of the day. We have the country by country reporting. We have the common reporting standard, where all your assets have been disclosed to the tax authority for the purpose of risk assessment, so that they can determine whether you have been paying the right share of taxes. So like I want to say, there are good side of international taxation that if you actually embrace them, you can increase your share of the pie, of the pizza. But the bad side is where you have to expertly, dimension and say, this is where I'm going as a nation. And if I implement this aspect of this recommendation coming from the global scene, then I may not be able to get to where I'm going as a nation. And we saw that very recently. There is a two-pillar proposal coming from the OECD on the digital economy and the minimum tax regime. And Nigeria, currently is on the side that we may not go for that, because we have something that I think will push us in the direction that we want to go better than what you are recommending from there. But there are some other aspects that Nigeria has embraced. The country-by-country reporting standard, the common reporting standard have been embraced by Nigeria. The revision to the OECD Model Tax Convention and the provisions that were revised also has also been embraced in Nigeria.
Brilliant.
So that's the perspective to look at it from.
Brilliant and very wonderful presentation, given the perspective of what OECD has actually been doing as the center of focus in the areas of substance, coherence, and making taxation to be transparent. I know if the big boys have to use their digital way of doing things, we of the developing nation might find ourselves one thing. But I think with the cohesion aspect and the transparency that has been brought to bear, nations like us can definitely benefit from what you're saying on the area of country by country reporting and the other aspect of it. Just to make it interactive, I can see Kola Wole Alo bringing this question up, saying, is there any international taxation professional body in Nigeria? Okay, welcome back, Mr. Emmanuel. The question from Alo is asking if there is any international taxation professional body in Nigeria, just like we have the CITN, the ICAN, and other things. Do you have a response to this?
Sorry, can you come again with that question? I had a bit of
okay. Kola Wole Alo is asking if there is any international taxation professional body in Nigeria.
Oh, I think I mentioned that earlier. Maybe he just joined us. Let me just speak to that again. So we have a body called the International Fiscal Association, IFA. They pride themselves as the body of international tax experts in Nigeria. So if you are interested in being part of them, I think the association is open to public membership, and you can apply to do that. But like I said, there is no requirement to be part of any body before you can practice international taxation.
Yeah, I think Omolara too is asking this question. Is saying, what is the role of FRS in investigating the competitiveness of transfer pricing? Does the FRS have the capability to do a good job?
Okay, thank you, Omolara. You want to set me up. I interact with FRS a lot, but I will be candid enough in my response and put the correct perspective to it. The transfer pricing regime in Nigeria started in 2013. The regulation was published in 2nd of August of 2012, the very first regulation. And, it was a new thing in Nigeria. Everybody was pretty learning, even including the consultant and the tax authority. We were just learning the subject, in 2013. 2013 being the first year of compliance. But give it to the tax authority. They've done a good job of partnering with the OECD. We had session where the OECD personnel came into Nigeria to train our tax authority on how to review transfer prices and also perform transfer pricing audit exercises. And over time, we've also seen, representative from the FRS being part of the conversation going on at the OECD level as per coming up, with new laws and new framework, as the case may be from time to time. So over the years, we can say that the transfer pricing regime in Nigeria is maturing. In 2018, they revised the TP regulation to even address some gaps that were in existence in the very first edition of the regulation. So over time they've kind of ramped up knowledge, and these days what we are seeing so far is that the FRS has stepped up, in the aspect of investigating the competitiveness of transfer pricing. And these days, they've been raking in some good money from transfer pricing adjustments. So if from that alone, I think they must have developed capacity to do a good job in reviewing those prices.
Brilliantly, and I can support you on that. There was a time I always hear of a name in FRS, Mr. Gbojubola, who is an expert,
Matthew.
and Matthew Gbojubola, who is also a member. And like you said, they seems to be raking good money even for the government from the international tax. Sulaiman is saying something. How can a company determine the CUP where the company enjoys a monopoly of its products in Nigeria? Uh, are you with
Okay,
me?
that's a technical. Yeah, I can hear you. I can hear you.
Okay.
Yeah, so that's a technical question. I'd rather say you should come to me so that I provide a private advice on that. But it's fine. Let me attend to respond to that. In the sense that the CUP, as he has rightly mentioned, is what we call the comparable uncontrolled prices. So in transfer pricing, what we try to do as much as possible is to compare controlled transaction with uncontrolled transaction. So what is trying to ask, if I can help the audience to understand the question, is to say where you enjoy monopoly in a market and you can't readily find, independent people, rendering those kind of service or selling those kind of products in the market, then are you able to apply, the CUP reliably, So there is a different aspect to CUP. There's something called the internal CUP, where you have information internally, both information of third parties and information of related party. But when it comes to external application of CUP, that's where you have to rely on databases. Databases are independent people coming together to collect data about transactions that you can possibly use for the purpose of your transfer pricing analysis. So you may not get the data from your economy, and that's where your technical competence will then come in for you to perform the relevant TP adjustment to those data, so that what you have as your final set of comparable is indeed comparable with what you try to test. There's a balance in transfer pricing. Please, you must not compare apple with mango. Please make sure that you are comparing apple with apple. And as much as possible, whatever you are doing, you want to be sure that at the end of the day, you are comparing apple with apple.
Comparing apple with apple, comparing orange with orange, and don't compare mango with banana so that it will not slip you off the road. What a wonderful delivery, and I'm sure our audience have actually benefited from that. Before we go on a very short break, let me quickly bring this to you. Mr. Onasami, what is the relationship between transfer pricing and double taxation? Is there any correlation between them?
Oh, okay. Okay, I would not say correlation, because if transfer pricing is actually done the right way, is actually the cure to double taxation.
Brilliant.
You understand?
Brilliant.
So if you have done your transfer pricing the right way, that is the cure to double taxation. I will paint a scenario to explain that. And if you, for example, I'm an entity in Nigeria and I'm enjoying management support from an entity in, say, Ghana, you understand? And I'm not careful enough to ensure that, the prices of those management supports reflect what we call an arm's length price, the price that an independent party will have agreed to pay, assuming they are not related, at all, you understand? So if you fail to ensure that those prices reflect an arm's length, you are faced with the risk of double taxation. And why? Because the moment I pay that money to the Ghana entity, the tax authority in Ghana has already, taxed that amount. So God now help me if the Nigerian tax authority comes for transfer pricing audits and revise the amount that I supposed to have paid, you understand, and then raise additional assessment based on that audit exercise. I will pay additional tax in Nigeria that may not get corresponding adjustment in Ghana. You understand? Although they are trying to put in place bilateral instrument for corresponding adjustment, but it's not as seamless as that. It takes process. It takes years before you are even able to get corresponding adjustment. In some cases, it's impossible. You understand? So if you are not careful enough, as a business to ensure that your transfer pricing interaction is strongly reflects, an arm's length outcome. When I say strongly reflect an arm's length outcome, it's such a manner that you can defend it with supporting evidence and economic facts. You may be facing the risk of double taxation when the taxman comes knocking.
Brilliant, brilliant, brilliant. Let me quickly attend to Oluwagbemiga. He's trying to seek some clarification. He said, how can individual, not firm, not company, be involved in international taxation? He's painting a scenario that do you have a platform where one can do consultancy service for international company of individual? The question looks a bit tricky, but I'm sure you can provide response to that. Is
okay, if I just so if you want to be involved in providing service to individuals in the international taxation space, I think the first thing for you to appreciate is how does the international taxation space affect individuals. You understand? Okay. And let me help you by saying that the tax regime in different countries, they differ. For example, if you are a Nigerian and you are based in Nigeria, you have tax obligation to pay tax on your global income, whether you earn the income, you understand, from anywhere. Your global income is taxable in Nigeria. And we can see the incidence of Nigerians nowadays having double citizenship. You have a Canadian citizenship, you have UK citizenship, US citizenship, in addition with your Nigerian citizenship. So from an individual perspective, the fact that you are a citizen of a nation ordinarily confers some tax obligation on you. You understand? I'm aware that in the case of US, wherever you are located, notwithstanding to the extent that you are still carrying the US passport, you have some filing obligation to do in the US. You understand? So you may not have tax to pay, but you have filing to be done. Tax returns has to be filed. You understand? And we've seen also, the issues around people going to Canada, having dual citizenship in Canada. There's also tax obligation in Canada. So from an independent person or individual perspective, and if you want to provide consulting service in that space, you have to first understand, how your multiple citizenship can expose you to different taxes in different jurisdictions. And in addition to that, when you are also doing transactions that are cross-border. For example, I'm in Nigeria, I plug into Fiverr, I plug into Udemy, I plugged into Upworks, and I'm churning work from my room in Nigeria for an international company somewhere in Netherlands, and they are paying me in USD in my account. So what are the type of taxes that I'm exposed to? Am I expected to pay taxes in Nigeria? Am I also expected to pay taxes in the Netherlands? So you need to first appreciate all those aspects of taxation. And that is where you can say, you want to start providing some form of support to individuals when it comes to international tax.
Brilliant, brilliant. We must have a deeper knowledge of what taxation is all about before we delve into it as an individual to carry that out. I've been on with Mr. Emmanuel Onasami ACA, who is a senior manager with Adamson Tax, talking international taxation and Nigeria economy. In a short while, we'll be going on a very short break, and we will be right back. Stay connected with us on ICAN on Air. Thank you.
As a finance professional in a disrupted business landscape, what does it take to be in demand? What does it take to attract great paying international roles? If you're an ICAN member, it'll just take one exam. That's all it takes to complete the globally recognized SEMA professional qualification and the internationally respected CGMA designation. As a SEMA member and a CGMA designation holder, employers will look at you as a finance professional, constantly acquiring new skills to add value to the business. That's why they'll be willing to pay premium to hire and retain you. If you have 5 years of relevant experience and are an ICAN member, you can directly sit for the final exam of the SEMA Professional Qualification, the Strategic Case Study Exam. Start studying the SEMA Professional Qualification. Prepare to make an impact.
Welcome back, our professional colleagues, friends, students, ladies and gentlemen. You are on ICAN on Air for this day, Tuesday, the 21st of June. And I've been discussing international taxation and Nigeria economy with Mr. Emmanuel Ososami, a member of our great institute. You're welcome back, Mr. Onasami. Let's go straight
Thank you very
to
much, Mr. Chesson.
a few questions before we bring it to a close for today. You see, it is impossible for us not to touch on digitalization when we talk on ICAN on Air, because one of the baths that we have given to you is digitalization has brought this to bear. Can you tell us how digitalization has shaped taxation and your estimation in Nigeria? Is it faring well that in the aspect of tax digitalization?
Okay, let me backtrack a bit in responding to that. You know, I mentioned the base erosion and profit shifting project. And luckily, the very first action, you know, what that project is all about is that they looked at the different mechanisms that multinational taxpayers use to either avoid taxes or evade taxes. And they bucket all the action points into 15 of them. The very first action is addressing the challenge relating to digital economy. You know, when we drafted our local tax law, nobody was thinking digital economy. Nobody was thinking the internet. You understand? So some of those laws are out of date, and they are they are unable to catch up with the development that is going on globally. You know, we are here this evening. Some people may be plugged in from Netherlands. Some people may be plugged in from any platform, you know, and somebody is providing that service. You understand? And where is the service being provided? Where is the service being enjoyed? Those questions are on the table. Where should the taxes be paid? You understand? For the value that is being derived. So those are the concerns that were addressed in that very first action point. And, you know, those are the things leading to the two-pillar, you know, solution that I also spoke about earlier. You know, for you to understand the impact of the digital economy, you can actually be in Nigeria and earn, you know, hundreds of thousands of dollars, you know, in Nigeria, having not leave the shore of Nigeria. And, you know, the traditional definition of fixed base, you know, for you to be taxable in any country is where you have a physical location or you have a dependent agent. You understand? Those things have been shattered by technology. You understand? And what's the conversation going on in the digital, in the international space is to then say, no, we can no longer watch. You know, I can mention some name because they are household name and they won't constitute any form of you know, risk on this platform. You know, every one of us will enjoy Netflix. You understand? Netflix doesn't have any shop in Nigeria or any form of presence in Nigeria. You know, but we pay them some good money and they are generating value from Nigeria. You know, we put out adverts on Facebook to promote our goods and market and products. You know, and Facebook is actually getting income from Nigeria. Instagram, the same. You know, we have Amazon selling to Nigeria from wherever. You understand? We have Walmart doing the same thing, selling. You understand? Those kind of digital economy, they've made us to realize that we'll be losing a lot of money if we don't pay attention to the taxation of the digital economy. You understand? And
Yes.
at the international scene, there's a framework that is called the two-pillar solution that you're trying to put in place to kind of address the digital economy. And the first pillar of the two-pillar is speaking about taxation of the digital economy, where some businesses that meet some particular threshold of revenue in a particular country will be deemed to have crystallized a fees base there. You understand? So, for example, say Twitter generated advert income up to so amount of dollars, you understand, in a particular year, it will crystallize a fees base in Nigeria such that Twitter will then have to pay tax in Nigeria based on the income that is generated from Nigeria. And those frameworks are being developed, and it's expected that by the end of 2020, end of this year, it's going to be finalized, and then it's going to be rolled out in 2023. Nigeria has not fully indicated interest to be part of this for some reservation, but Nigeria also has its own variant of has its own way of addressing the digital economy. So Nigeria has also fashioned out what we call an order, called the Significant Economic Presence Order, in Nigeria. I don't know if we are all familiar with that order in this room. The Significant Economic Presence Order. So what Nigeria has said that if you as a foreign business or an international business or a digital business that meets the criteria set out in that order and up to 25 million naira in Nigeria in any year, that income has crystallized a fees base for you in Nigeria. You understand? Such that you will then have to account for all the income that you generated in Nigeria and prepared your results for the Nigerian operation and then pay the taxes that you're supposed to pay in Nigeria. You understand? So Nigeria believes that the Significant Economic Order can allow us to get more income and capture more digital businesses than the framework that the OECD has suggested. And as such, they are not too ready to plug into what the OECD is suggesting on digital economy. Yeah.
Brilliant. And that will take me to this question. I know you gave kudos to FRS that they are actually trying their bit in keeping tab on the international taxation. But I just want you to, in your personal view, since you carry out businesses with this arm of the agency of government, what area do you think they can improve to keep tab on international taxation?
Well, a lot is going on the international scene. A lot. Different framework coming up every day, different instruments coming up every day. And what I just want to put on the table, yes, Nigeria has been part of the conversation, has been in the room when the conversation is going on. I want to believe that the interest of Nigeria has always been maintained, you understand, in this conversation. So my concern is only the aspect of implementation. There's a reason you plug into this framework is so that, number one, you can increase your tax base, you understand, and rake in more taxpayer into the tax net. For example, the Common Reporting Standard regulation is an initiative of the OECD that Nigeria signed
we
up,
still have Mr. Onasami, but I think there's a slight internet disruption.
Hello, can you hear me now?
Okay, I'm with you. We understand the interruption from the internet. Go ahead, please.
Oh, okay. So I was trying to give an example, of such a thing that I think we can be better with the implementation. So I was citing the example of the Common Reporting Standard. The way the Common Reporting Standard works is to say, you obtain information from financial institutions that houses the assets of companies and individuals and report those information to the tax authorities such that they share the information with each other. So Nigeria will obtain the information from the financial institution in Nigeria concerning some other people that are in Nigeria that have obligation outside Nigeria, and then report it to the respective countries that have interest in such information, and vice versa. Nigeria also will receive information about Nigerians that ought to be paying taxes in Nigeria from other jurisdictions. But what we have seen so far, is the compliance aspect of it. The tax authority pushing for banks to plug into that initiative and file the returns as expected. But what we have not seen in recent time is what the tax authority is doing in analyzing those data that they are receiving year on year on that framework. You know, there is an idea of just getting a data dump and you can't make any sense out of that data. But who is analyzing the information that you are receiving and bringing out insight from those information such that you can expand the tax net and bring more people to the tax net, increase your tax base, and as a result also increase your tax revenue as a nation. So that is one aspect of it. It's not just brilliant enough for you to see the positive in the recommendation coming from the international scene and be happy to plug into it. You have to be careful enough to also ensure that you are able to extract the benefits that are coming from those frameworks. Otherwise, you know, you must have shortchanged yourself as a nation.
Very brilliant, very brilliant. Not just dumping the data, not just gathering it. All you need to do is make sure you analyze and get the good out of it that will be beneficiary to us. While we are rounding up, please can you advise the Nigerian tax practitioner on the emerging taxation issue? Your advice, just in one word.
Okay, let me just put it out there that the traditional tax space is saturated. And if you want to actually differentiate yourself, in the market and command premium in the market, this is an aspect, a niche aspect that you can specialize. There's a lot of things going on, common reporting standard, country by country reporting standard, automatic exchange of information, OECD model tax convention, and all those two-pillar, recommendation going on. There's a service that we are coming up in Anderson, if you permit me to mention. Is to say we call it the BEPS advisory, where we proactively, review the books of multinational and advise them on how the development in the international space will potentially affect their businesses in the coming year, so that they can plan towards that. So I will just put it out there that there are a lot of niche area coming up, and there are other opportunities opening up for tax practitioners in Nigeria. If you can plug in, then you definitely be smiling to the bank.
Brilliantly. Let's get involved, do more research, and increase our knowledge base in international taxation. I will be beneficiary of the goodies and the largest that is entrenched in it. On the final note, can we have your parting words in less than 30 seconds?
Okay, thank you, Mr. Olusegun, for having me this evening. Thank you, the team, and ICAN for giving me the opportunity. I sincerely appreciate that. So for the audience, thank you for also joining. You've made the session interesting. I want to believe that we've passed across some insightful comments this evening, and it's just for us to continue to monitor the space. There's a lot happening in that space. Monitor that space, and that will make you a better tax practitioner, because the truth is, you could offer domestic advice and a development in the international scene will throw your advice wrong. You understand? If you are not following what is going on from the international scene, you may not be able to provide an holistic advice to your clients every time. Thank you very much.
Thank you very much, Mr. Emmanuel Onasami, for this wonderful and insightful section on ICAN on Air. And let me also appreciate all our audience for being part of us today. Before I go, let me quickly chip in a small announcement to tell us that the 52nd Annual Accountant Conference of our great institute will be coming up in October. And we want each and every one of us to prepare and be part of this. And without wasting our time on this note, we have come to the end of the show, and I want to bring to your notice that we will be gathering again on Thursday, the 23rd of June, 2022. Same time, 6 p.m. on all our social media handle, Twitter, Facebook, Instagram, YouTube. Stay connected and come and have educative section, insightful section that can enrich you and make you more productive. See you same time on Thursday, the 23rd of June. 2022. Bye for now from our production team.